The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 9 a.m. Eastern Time, Wednesday morning. We got about 25 minutes to go until the opening bell, and we got markets in positive territory across the board right now. You're looking at an S&P positive by 7 points, trading at 39.55, putting things on a 15-minute basis. You can see we were lower yesterday. We dipped to about 39.45 overnight and back to positive territory. You get the NASDAQ 100 up 85 points, 12,962. We got the Dow right now flat, 32,922 in the futures, and we got the Russell positive by about 9 points at 2201. Bitcoin backing off a bit. How about reaching 60,505 this morning? We've backed down. Look at that acceleration. 58,665 on Bitcoin. We got crude right at about $60, $60.30. Gold contract, 1686. Gold makes it to 1677 overnight. Gold technically flat on the session right now at 1687. We got the silver contract down 5 pennies at 2408. And notes and bonds, a little bit a higher price from the lows we had yesterday. You're looking at the 10-year technically positive by 1 tick right now at 131.07, and the 30-year positive by 6 ticks at 155.07. We'll jump over to the volatility index, and we got a 19 handle as this market hangs near all-time highs. The VIX trading 1956 right now. All right, what else we got going on this morning? Well, the first thing we got, folks, right now, there's still time to sign up. Our man Larry Pesavento, he is in there live, beginning his live trading webinar, folks. Still time to sign up. He's going to be in there from 9 a.m. till 2 p.m. Eastern time. They're talking about trades already in there, folks. I was just in there for the first few minutes at 9 o'clock. Larry kicked things off. I jumped over to do the program at 9:06. I encourage you, if you haven't checked it out, folks, check it out on the front page. Still time to sign up. The full webinar event will be archived, the 5 hours, if you can't attend it all live. You also gain access to Larry's Fibonacci 24/7 trading service in there as well. The cost is $295. His trading service alone is a $97 value. It's a great value, folks. Check it out if you're interested. It's beginning right now. You can still sign up and gain access to that live event with Mr. Larry Pesavento happening right now over in our other trading room. All right, what else we got happening in the market? We got ADP payrolls. Private payrolls hiring bursts at fastest pace since September on rise in hospitality hiring. Private payrolls, we got this number at 8:15 this morning. Particularly important as we come out of the COVID shutdown. We're going to see some really high expectations for some of these numbers this month and the following months to come. You got private payrolls rising by 517,000 in March, the fastest pace since September. The total was just below the Dow Jones estimate of 525,000, well above February's 176. February had a lot of anomalies here. You're going to see it. There's going to be some big expectations from March because February was hit so hard by some of the weather that tore across Texas and some of the other parts of the country that you really had some tough numbers that were explained away, probably rightfully so, but we're going to find out as we get some future months of numbers coming out, but explained away, a lot of the numbers explained away because of the weather that was going on in February, particularly, of course, Texas and the likes, as we mentioned. But in terms of this number, hospitality, and this is where we're going to have to see it, folks, because this is the one that's been battered the most. Hospitality leading the way, adding 169,000 new workers. February revised sharply higher from the original 117, so it looks like February comes in at a number of 176, so that's an increase as well in terms of where we were. When you get into the actual numbers, so March total represented the biggest hiring burst since September's 821,000. You had, hospitality and leisure adding 169,000, part of a 437,000 increase overall in services-related jobs. Hotels, restaurants, bars, and like have, quote-unquote, the most opportunity to improve. Yeah, not putting it lightly, as in, of course, they have the most opportunity to improve. That's somebody out there, chief economist at ADP, talking about the numbers there. Trade, transportation, and utilities added 92,000. Professional and business services increased 83,000. Education and health increased 68. Goods producers also showed strong growth in the month. Manufacturing adding 49,000. Construction gaining 32,000. Strong numbers in a big way for ADP. We get non-farm payrolls on Friday. Interesting, we get them on Friday because the market isn't even open on Friday. So that's all we get a long weekend coming up where we're going to get non-farm payrolls for the month of March, and we're looking for a number of about 675,000 is what they'll be looking for. The unemployment rate projected to fall to 6% from 6.2%. The skew of the unemployment rate right now, folks, we have a lot of people who have taken themselves out of the workforce who are no longer counted on that headline unemployment number. Some estimates on the non-farm payroll number as high as 1 million jobs added. And they should be that high, folks, in whether it's March, April, May, or June, because we're still 10 million jobs under where we were prior to coming into COVID. We got to make out 10 million jobs. That's what Chairman Powell is focused on, which is why he's so ardent on being stuck at low rates for so long, because no matter what, with the S&P sitting at basically record highs, we got the S&P up 6 points right now, waiting for the opening bell. You got a lot of reality that needs to come to fruition from the rhetoric being talked about when you look at where we are on this chart and the expectations of where this market is going to be and the pent-up demand as we come out of COVID. Well, we're about to come out of COVID, so it's time for that pent-up demand to show up in reality, to show up in the numbers, for jobs to come back in the services sector in particular, and this might be the beginning of a pretty strong ADP jobs number. We'll see how the market reacts to this, and we'll really see how the market reacts going into a long weekend when we get non-farm payrolls for a pretty big month that's to be expected for the month of March. We'll see how that plays out. All right, what else we got going on? That was ADP. In terms of news out there, we're going to get a big plan today from President Biden. He's going to be talking a $2.25 trillion spending, corporate tax hikes. He's talking about infrastructure. We'll see. Seems like it's been infrastructure day for the last 5 or 6 years, right? But tonight, I believe it's at 4 o'clock tonight after the market. We'll see how that happens, but he's going to be talking about a $2.25 trillion U.S. infrastructure plan Wednesday, paid for by tax hikes on businesses that his administration said will prove the most sweeping since investments in the 60s space program. So you got a 4-part, 8-year plan, $620 billion for transportation. Folks, I'm pretty sure transportation spans both sides of the aisle. We need some money for transportation at a time when we need some economic stimulus as well. Get some of those people out there employed. Get our roads and our bridges back to working condition. I mean, it's a shame the amount of money our country has and our infrastructure is just falling apart in a big way. $650 billion for initiatives tied to improving quality of life at home, like clean water, high-speed broadband. $580 billion for strengthening American manufacturing. $180 billion, which goes to what's billed as the biggest non-defense research and development program on record, and $400 billion to address improved care for the elderly and people with disabilities. The plan's going to increase corporate tax income rate to 28% from 21%, and it's going to set a 21% minimum tax on global corporate earnings. The White House said tax increases will be fully paid for the investments in this plan over the next 15 years. You're going to see a lot of battle over that one, I'm sure. Nonetheless, that's going to come out tonight. We got non-farm payrolls on Friday, and we get the markets in positive territory, waiting for the opening bell in 15 minutes coming up. Stay tuned, folks. We got a lot of equities to take a look at. We got 15 minutes to go until the opening bell. And don't forget, check out Larry, folks. If you got the time, you're interested, he's going to be live trading today. Special event going on the front page of TFNN. We'll be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We got 12 minutes to go until the opening bell. We got markets in positive territory. The Dow right now technically flat, trading at 32,925, jumping around to some of the stocks with earnings. We are still in earnings season. We got a couple headline numbers out there. You got Chewy. They're out with their numbers, a surprise profit of 5 cents a share compared to the market thinking they were going to lose 10 cents a share. Revenue beat estimates as well. Net sales, think about this. Net sales surged 47% from a year ago as homebound consumers ordered more of their pet food and other products. Chewy shares up 10.4%. Let's check out how they are holding. I mean, remarkable. Look at this. So last night they're out with the numbers. We're continuing the acceleration. You're up more than 10% now. You're trading up $12. You're up a solid 15% from yesterday's close. Quite a strong stock indeed. We're going to be challenging 92 this morning. Now, quite a sell-off from 120. You put this thing back on a 3-year weekly, though. We were down at $20. We came into COVID at $30. You're going to come out today on the opening bell at about $92. Some of these stocks, though, folks, we've seen them. The ramp up has been pretty remarkable, and the expectations, everything has a pullback, folks. It doesn't go up forever. This stock, obviously, on the heels of those earnings, super strong equity in a big way, but doesn't mean, going into the earnings yesterday, you had shaved 33% off the price of the equity just from where we were trading at in the middle of February. Talk about some volatility, but Chewy looks to deliver on their numbers last night in a big way. The news is out there talking about the potential for the vaccine for children. So Pfizer vaccine gives 100% protection, ages 12 to 15. In the study, the company will seek to add adolescents to its FDA authorization. Results could pave the way for shots in teens before school reopens. Important that they're going to be talking about studying, of course, how this reacts with children before they push that out. Looks to be a good deal going on in terms of the information there. You had 2,260 adolescents. The vaccine produced antibodies against the COVID-19 vaccine that exceeded the levels seen in vaccinated young adults. Pfizer and BioNTech said in a statement, all 18 cases of COVID in the study were teens who received the placebo. Side effects consistent with those who experienced by people who were taking the shot from 16 to 25. Encouraging that news there continues on the vaccine front. Jumping back to stocks with action, we got Walgreens out with their numbers, strong numbers. They got $1.40 a share. The market was only looking for $1.11. The company raised its full-year guidance. The market loves to hear that. They said quarterly earnings were pressured in part by weaker sales of cold, cough, and flu products, a continuing theme, folks. As we've shut down basically the entire world, social distancing, mask wearing, etc. Many flu, cold, a lot of that stuff not as prevalent as normally the case. But Walgreens right now, it says they're higher. Let's check in on where they are still. Walgreens, look at this chart. I mean, remarkable when you look at where we were. We come into COVID on Walgreens at about a price level of 53. We're almost back to that level. You dip to 33. You put this thing on a 15-minute, and we're trading up by about $1 right now, pre-market to 54.20 for Walgreens shares. Lululemon out with their numbers as well. This is a stock. I mean, check this out. Talk about expectations being priced for some perfection almost. I mean, look at what they came in with. So they beat on the top and bottom lines. Let's pull up. They got it. So they're better than expected sales. Digital business accelerates during the fourth quarter. Its online sales surged 92%. Women's sales were up 19%. Men's sales up 17% during the quarter. Getting into the numbers, they earned $258 versus $249 expected. Revenue of $1.73 billion versus $1.66. Not bad. Selling athleisure gear in the period of 90 days. Revenue spiked roughly 24% to $1.73 billion from just $1.4 a year ago. As I mentioned, online sales surged 92%. In North America, revenue grew 21%. International sales grew 47%. Direct-to-consumer sales nearly doubled, represented 52% of total sales in the quarter. Remarkable when you think about the type of numbers they're doing, all right? So what did they do? They had revenue of $1.73 billion, and a majority of their revenue was done online. Direct-to-consumer sales nearly doubled. Remarkable. We're still in the early innings of our growth, fueled by exciting innovations the CEO was talking about. Now, in terms of what they're looking for in the future, they expect first quarter revenue to be in the range of 1.1 to 1.13. Analysts were looking for just shy of $1 billion. For fiscal year, the company's calling for revenue to be in the range of 5.55 to 5.65. Analysts were looking for 5.52. It cautioned, however, that further resurgences in COVID-19, including from variants, could cause additional restrictions. I mean, every public company should have that, folks, because that's where we're living it. And this is the reason why, when people say for the vaccine, well, if you're protected, then you shouldn't have to worry about me, right? Well, if you got your vaccine, don't be so concerned. You see it out there, folks, with people saying, well, if you got your vaccine, right, then I don't need to get mine because you're going to be protected. Not the case, folks. These variants, the more people who get the virus, the more variants have the possibility to spread, the more variants have a possibility to basically overcome some of those vaccines. Every single public company better be aware that, however, more variants, more resurgences could hurt their business. Nonetheless, what I'm talking about here, why are we trading lower? Strong numbers, folks. A lot of these companies priced for perfection. I mean, come on, that's a tough one. Imagine being in the C-suite in Lululemon. You come out with all those numbers, and the market says, we're going to trade you lower to the tune of about 2% right now. Lulu, we were down to 150 at the lows. You came into COVID at about 252. We're going to sit this morning at 310. All things considered, not that bad. And really, I mean, you want to talk about a rocket ship, right? This thing was sitting at $50 as recently as the middle of 2017. We're going to be sitting at 310 when we open today. Strong company, strong earnings, but the market basically looking for a little bit more than that if they wanted to trade higher. Lulu trading a little bit lower on some pretty decent earnings in a big way for Lululemon. All right, what else we got going on? The cannabis sector. Interesting to see how this one heats up. I saw some news out there talking about maybe potentially of the Senate looking at some type of legislation as well. This story here has to do with New York passing a bill to become the 15th state to legalize recreational use. You have the governor expected to sign it. You have some of the cannabis companies in particular, Tilray, Canopy, Afria, Aurora. They're all positive on that news. We do have some Canopy in my newsletter, Rocket Equities and Options. Nice to see that acceleration. We're up to 32.46 from 31.76. Backing this thing up just even on an hourly. And I'll put it back on the daily to see what we're talking about here. Now, boy, this thing's had a couple runs, folks. These cannabis stocks, a couple head fakes over the years. Now, this is a daily. If you look at where we were back in October, you trade from a price point of about $13.76. You rise to $56.50. You put a Fibonacci retracement number back here. Now, number one, this was an area of resistance originally, right? We gap above that area. You accelerate higher. We get a full pullback to that low made March 5th. We've bounced around on that low at $30 yet again. Like to see it holding the 618 retracement level for Canopy. Trading right now at $32.30. We closed yesterday at about $31.76. But check this out, right? We put this back on a 5-year weekly, okay? When these things get rocking, it's remarkable when you think about that these cannabis stocks really started going. Well, whether it's, you could say 2016, right? We got to run up from $1 to almost 15. Then in 2017, we got to run up from $5 to end the year at almost 30. 2018 is when things really started to go bonkers. We got up to 59.25. You were back to 25. We were back above 50. The next stop, once these things get rocking, at least in Canopy, folks, is those highs. Whether it's the high of this year, you're talking about 56.50, or the high that we had back in 2018, talking about 59.25. But the tidal wave in terms of where we are, you got New York legal, you got New Jersey legal, you have Democrats in control of the White House. Seems to be something that they're looking to pass some legislation, maybe take it off that federal Schedule 1 drug. I'm a bull. Those cannabis stocks, folks. Not hard to hide. Stay tuned. We'll be back with the opening bell.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got the markets open and we got markets rising. We got the S&Ps now positive by 10 points right now. You're looking at tech stocks, NASDAQ 100 positive by about 84. The Dow positive by 61 points. Quite a little pop on the Dow in that opening bell. Check that out. Futures gunning for 33,000 right now. And we got the Russell up a solid 0.7%, trading at 2208. Bitcoin 59,150. The headline for Bitcoin, pretty remarkable. It seems like headlines every single day for Bitcoin. You better have headlines, though, when you're warranting almost a $60,000 price tag on Bitcoin. Goldman Sachs close to offering Bitcoin and other digital assets to its wealth management clients. So yesterday, the news was PayPal is going to offer the ability to use Bitcoin, I believe it was, maybe some other cryptos in there for transactional purposes. Today, you got Goldman Sachs. They might begin offering those digital assets in terms of Bitcoin and other digital assets to its wealth management clients. Folks, it's becoming pretty prevalent in terms of where Bitcoin is. Not sure how you do away with it at this point in terms of, in the early days, the rhetoric was, and there's still a very legitimate case to be made in terms of will central banks allow Bitcoin to become so prevalent that they won't be able to control whether it's the money supply or control basically where money is going and see all transactions. I mean, you're getting to a point now where you got public companies like Tesla that are going to be holding $1.5 billion of Bitcoin. You have Goldman Sachs offering it to their clients. You have PayPal that's now going to begin allowing people to use Bitcoin for payments. Pretty prevalent how this is working. 60,000 right now for the price of Bitcoin, 59,015 to be exact. All right, what else we got going on? Some of the stocks that are making moves. How about Harley Davidson? They're positive. They get an upgrade at Baird to outperform from neutral. Noted that it's the first time since 2016 that it rated the stock outperform, saying the company's change in strategic direction and lean inventories among the positive factors behind the upgrade. HOG, this one has quite a roller coaster. Dow put this on a 3-year weekly. Excuse me, down to $14 at the COVID lows, up to $40. You back things up for a full picture of the volatility. There's some volatility. I mean, even if you start from where we were in 2008, right? Almost going BK down to $10. You were up at a price tag of $73 in 2014. You were up at a price tag of $63 in the beginning of 2017. If you remember, folks, that was on the heels of kind of President Trump, right? Making in America, etc. Yeah, not so much. We fade from a price tag of $63 in March of 2017 all the way down to $15, $14.65 at the COVID lows. This morning, though, we're going to open a little higher, checking out the 15-minute to 40.50. We closed yesterday, not open higher. We are now open, up 7% in Harley Davidson. Quite the acceleration from about 37.50 yesterday on the close. Apple. So Apple, talk about some volatility in Apple, right? Apple shares yesterday, we trade down to below 119 at one point. This morning, we're up 1.4%. So Apple gets an upgrade as well to a buy from neutral at UBS, saying it expected more stable long-term iPhone demand and stronger average sales prices. I mean, Apple, 1% in Apple, just so you understand, folks. I mean, the numbers they're dealing with. You're talking about a $2 trillion company. Every 1% is $20 billion for this equity. So you're talking about the market cap of Apple just went up by $25 billion this morning on that upgrade. The numbers are pretty staggering, folks, but when you're at that level, that's where they are. Apple on a daily, though, you got a little work to do. I mean, this has been consolidation for a while. We're sitting basically where we were in August of 2020. Apple consolidating after quite the run it had. We're sitting at 121.36 off the highs. We had a 145.09 on Apple. That high all the way back January 25th. And AMAT, Applied Materials, the semiconductor manufacturing equipment maker, again, rated outperform in new coverage at Bernstein, noting what it calls long-term positive structural stance. AMAT positive on that upgrade this morning. Here's the daily. Quite the acceleration for these chip makers. 41 to 131 this morning. Basically, you're flat. Well, not really, right? You're up 3.5% for AMAT, at 131.12. Let's jump around to some of the other tech stocks so far this morning. We'll put it back on a 15-minute. Before we do, I mean, I've mentioned it, folks, if you're looking for a long-term position, and I'm talking about holding things maybe a year or 2 or 3 or 5 or 10 years, right? Retirement plans. You got kids out there building a retirement plan, whatever it is. you're approaching some levels, folks, in some of these tech stocks. You can't be getting into an equity that's consolidated like an Amazon. You're talking about basically, folks, we're going back to almost June prices of last year, and it's going to be April tomorrow. All right, you're sitting at 3,065. Doesn't mean we might have some volatility on the downside, but anytime you can get into one of these equities, and I know they catch a lot of heat, but you got whether it's Amazon sitting right at 3,000 for the last 8 or 9 months. You got Microsoft shares higher than what we've been, but you were trading on Microsoft at a price point of 216 back in last July. You're trading at 232 this morning right now. We have some decent support, maybe at the 220 level on Microsoft shares. Google, not quite the same deal. You're sitting almost at all-time highs. But again, we got a consolidation going since the beginning of February, maybe on Google shares, but especially when I look at Amazon shares, quite the consolidation. I look at Apple shares, quite the consolidation as well. And let's just jump around. Even a company like Netflix, right? Similar scenario. Netflix trading at 517.19. You've been consolidating for the last 7-8 months. These stocks that really accelerated first of all out of COVID, they got all the growth priced into it by the end of basically July or August. And since then, the market's just been letting it catch up with all that growth that's been factored in. Netflix trading at 517. Let's check in on some of my favorites. You got Disney up about 0.5% right now, trading at 186.61. Uber shares, you're up 1.2% at 54.15 as well. Let's check in even. Salesforce up about 0.5% right now on Salesforce at 211.68. Let's check in on some of the airlines this morning. JetBlue shares down about 0.8%, trading at 20.44. All things considered, somewhat near the highs that we made recently of 21.73, made March 15th. Southwest pushing those highs as well, 61.74. I've mentioned it, folks. If you're looking for air travel, you're looking to get it, JetBlue, they better send us some free gear for JetBlue for all the times I've talked about it. But just a service to the listeners out there. I'm pretty sure JetBlue, this is the last day that you can book fares on JetBlue with no change fees, no cancellation fees. You book the fare, you don't want to fly, you can just cancel it for free. They still have some decent deals out there. If you're thinking about booking a trip, check that out. I'm not sure the other airlines. I know JetBlue just because they have some great fares going from Tampa to Boston, a route that I'm familiar with. But demand is coming, folks. It's here. And you're not going to see anything like this in terms of free cancellation and free change fares when the country gets back to normal business, which we're right coming into. There's a reason why these stocks are pushing basically right where we were prior to COVID. You're back to normal, and things are about to explode here for some of these in a big way. All right, what else we got going on in the markets? Checking in on some of the commodities. Crude. Now, there's a yearly for you, just like it didn't happen at all. Going all the way down to $6, actually made negative prices, of course, on some of those contracts last year in April. Crude sitting pretty at about $60, right where we were prior to COVID. You got the gold contract. Gold sitting at $16.91. This is a critical area for gold. You've dipped below kind of the $1,700 price point, but as you can see, you go back to where we were in April, May, and even June. That was a consolidation area for a while. These are weekly bars. You were there for about 2 months. It also correlates to the high we were at before we fell out of bed during COVID. That high was $17.04. That week, we made it to $15.04. Nothing like a $200 bar to the downside. But if gold, look for it to hold this level. Because if it gets really out of whack below about 16.75 or so, it starts challenging the lows we made early last year. Next stop could be 1,500. Price of the yellow metal. Stay tuned, folks. We're coming back with Teddy Kegstad. We're going to be talking some Forex this morning. Be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We get the markets in positive territory. S&P's up about 18 points right now, trading at 39.66. Let's go over to our man, Teddy Kegstad, folks. Every Wednesday, 40 past the hour, we talk to Teddy. If you want to check out Teddy's great work, head on over to forex-trading-unlock.com every day. We got a lot of good action in Forex going on. We got a lot of where we can start this morning. Teddy Kegstad, what's happening, man?
Good morning, Tommy. We have some interesting things shaping up as the dollar had a big rally yesterday, and it's starting to seem like it wants to maybe have a little bit of a retreat. So let's kind of get into the major things that we have to watch to see how things are swinging. So
let's do it. Where are we going to start, man?
I'm sorry.
Sorry, I said let's do it. Where are we going to start?
So we'll start with let's start with gold, which is something you guys watch a lot.
Sure.
It failed to make a lower move low yesterday and today, so it's hovering just below new move lows. If gold holds and starts to make another run to the upside, that's a big thing as far as the dollar starting to be a short-term bear. Oil is neutral. We know the tanker's out of the Suez Canal. Things are getting back into flow there. Oil is still long-term is a bull, but right now I think that one's kind of off the table, at least in the short run. Now we have interest rates. They're doing the same thing that gold did. Yesterday's low is key. They almost made a lower move low, but they didn't. So now they're slightly positive today. If they start to trend higher, meaning lower rates, then we may have a short-term turn in the dollar, okay? Now, the low from yesterday's Treasury bonds is huge. If we fail there, we make new move lows, this is off the table. So now what does that mean for the currencies? The yen and the Swiss right now today are the ones that are falling to the dollar. The other currencies are stronger against the dollar, but only slightly. The yen, remember we've been talking about the 111 price target for the past month and a half.
I was waiting to get to the yen, Teddy. Quite a chart. Go for it. Yeah.
So now the thing is, remember how when we started blowing off these highs a month and a half ago, they were accelerating at an incredible rate. And that's why I think that you have to look at, like I said, started with the interest rates and the gold, okay, and the oil. Should we get a bounce in gold and a bounce in interest rates? That would mean we're setting a higher move low, not necessarily going to be a big rally, but that would help to send a little correction in the dollar. the currencies that are strong versus the dollar is basically all the other currencies, except they're not making big moves. And remember, we had that sell signal in the Australian dollar, US dollar last week with the head and shoulders. It's still bearish. So I have a downside target there of 75 even to even 73.75. Now, this is if the dollar trend continues to be strong. If we get this short-term reversal because of gold bouncing and oil staying static and interest rates going down, then I think that's off the table. Then you'll see a rally in this. We won't see the market hitting support in places like the Australian dollar and and like the New Zealand dollar as well. So those I'm still a little bit bearish on, but only if, like I said, the dollar keeps on following through to the upside. The U.S. dollar yen, I mean, the targets now are ridiculous. So, I mean, now we're looking at 113.5 to 114 even, which I would say would, if the dollar gets a little bit of a turn, probably will slow down. You know, if oil starts to retreat, interest rates start to go down, and if gold gets a rally, the yen will probably have a sell-off. Now, remember, I always remind your listeners how we have flight to quality. And this is where this scenarios come into place, because the yen is a flight to quality currency in Asia. It's getting pounded. Europe has lockdown issues that continue to grow, so the Swiss is getting pounded. Okay, so these are runaway rallies, you know, but they are good for a little bit of a correction. But I would not try and jump in front of these things. I'm just telling you, because they're way too strong. You know, now, if you had like I said, a big explosive rally in gold and a big bond rally, you know, and maybe even another sell-off in oil, then you could probably see a decent correction in the U.S. dollar yen and even the U.S. dollar Swiss, maybe slightly. But I don't see that really coming. I think it's more of a short-term maybe pause that you'll get on those two. So don't jump in front of those freight trains. Now let's get to the pound and the euro, the big guys.
Okay.
The pound is still short-term bearish, and especially as oil stays neutral, it's going to be hard for the pound to catch a rally, you know, because their lockdown issues are severe as well, you know. So only if you get a big rally in oil, in which case then I would say you'd start to become bullish to pound again. But right now I have a downside target in the pound of $1.3540. Okay. I think that's going to be an extreme for as far as how far you can get. If there was a big sell-off in oil, which I don't see, you know, I'm still looking for $100 a barrel over the next 6 months or so. That would be the thing that would take that, you know. Okay. Now the euro, this is a tough one, because this is a falling knife scenario with flight to quality currencies like the yen and the Swiss getting pounded, and with gold not holding up. It's really hard for the euro to gain strength versus the dollar, especially with the lockdowns. So I still have a downside target of around $1.1620. I don't think you're going to see much more than that. I think we'll start to see some stability. You got to remember, unemployment is a big issue. So if we get good claims tomorrow, and we've been talking about this, how over the next few months, unemployment is a big deal. It's a bond number. So, and that means that if we do get favorable claims, if we start to see a bigger downtick in the unemployment number itself, then this will start to cause a bond rally. This will start to cause a gold rally. This will start to basically take the dollar strength out of the equation, you know. So we still have to see how these pan out. But the bond numbers are big now, especially like the unemployment.
Yeah, interesting. We got ADP this morning, right? We get non-farm payroll on Friday, even though the main markets are closed, it looks like, for Good Friday. But yeah, I agree. We talked about it last week and talking about, you know, the rhetoric of the anticipation of the months to come. And it kind of begins right now with the talk of this ADP number. You know, we got services jobs already kind of back in there, right, Teddy? That was a big number for services this morning. And I agree with you that we're going to see a big ramp up in expectation for those numbers in the months to come. We got about 10 million jobs to make up in the U.S. alone from where we were prior to COVID. And I think this is the first taste of kind of, you know, some big expectations where tomorrow or Friday they'll be looking for like 600,000 jobs. And I know that's going to reverberate in terms of what you're talking about here with rates in a big way that hit the currencies. And of course, that's going to factor into the market too. I keep talking about just, you know, an S&P sitting at all-time highs, basically waiting for, and I like to use the expression, rhetoric to become reality, right? You know, the expectations to be met, what they have. And it's cool to get kind of the take on how you put things in the Forex market and the currency market, of course, because, yeah, I completely agree, man, in terms of, the expectations, how they play out, but they're going to be pretty grand over the next few months. And I think one thing's for sure, we're going to see some movement in these markets as we get some of these market forcing, economic indicating numbers out there.
Right. Well, what's a good sign, too, for unemployment is that, and this obviously affects the dollar. If we can get unemployment to start to fall, the dollar is going to start to fall off as well from this rally, And I can see it even like locally, like this year there's signs around the park districts. We're hiring lifeguards. Well, last year the pools were closed.
Cool.
So kids, there's jobs now again for kids for the summertime, which that takes a little pressure off of the parents too, as far as providing for their kids for like their own extra expenses and stuff.
Totally.
So these trickling things, I think no matter what, we are going to see over the next couple months. The biggest thing is, can we sustain it throughout the rest of the year?
Because we got to sustain it for a while, man, right? To make up kind of what we lost, for sure.
Right.
Teddy, man, we appreciate the weekly update. We'll talk to you next Wednesday at 40 past the hour.
Thanks, guys. See you next week.
Thanks so much, man. Take care. Stay tuned, folks. We're coming right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the S&P's up 16 points right now, trading at 39.64, right up there, bumping up against the all-time highs at 39.78 with the print we had just in the last couple of weeks. Staying on cannabis for a second. So I mentioned the push. Now you have New York legalizing cannabis, 15th state making it recreational. That's one push going on, but you also have the article out here from early this morning, 2 a.m. Eastern time, that you have Schumer pushing the Senate on pot legalization as states leap ahead. So you have the majority leader of the U.S. Senate, Chuck Schumer, pushing the Senate toward lifting the federal prohibition on marijuana, which legislation would represent the biggest overhaul of federal drug policy in decades. I bring that up, folks, because you're seeing some action in these cannabis stocks already today, jumping around to some of them. Canopy's my favorite. You're up 3.5% today. And to see where we are, backing things up just for a little bit, putting it on the 10-minute. Where were we when we got the acceleration for the New York news? Maybe we were back a little bit further. I'm trying to find the day because we shot up and we shot back down in no time. Maybe we'll go back 20 days. Either way, look for these stocks to catch an acceleration, folks. That's quite a move if the Senate does pass that. That's what the market's been waiting for. Tilray's up 8.9%. You have Aurora up 5.8%. Some big movements on some of those stocks, much bigger than what they have going on in New York. Because New York, it's legal. It might take 18 months before you start really seeing sales in that state. If they start moving on a federal level, that could really be a ramp for that industry of cannabis. All right, folks, we got markets in positive territory. Quite a day. And don't forget, there is still time, folks. Larry Pesavento, he kicked off his live trading event within the last hour. That's a 5-hour event going on until 2 p.m. Eastern time. All of that's archived. So even if you missed the beginning of it, you can check it out. Still time to sign up on the front page of TFNN.com. Thanks so much for tuning in, folks. Thanks for starting your day with me. I appreciate it. Great way to kick off the morning. Stay tuned. We got our man Basil Chapman. He's coming up next with the Tiger Technicians Hour from 10 to 11. Of course, we got Fast Market live from 11 till 12. We're not going to have Larry today at noon because he's doing his live trading webinar. But then we got Steve Rhodes live at 1, Dave White live at 2, Tom O'Brien, my dad, live at 3. Stay tuned, folks. Basil Chapman, he's going to be coming up next with the Tiger Technicians Hour. We got the S&P's positive by 16. Tech stock positive. NASDAQ 163. NASDAQ 100. Stay tuned, folks. Basil's coming up next. Have a great morning.